Good morning in the Movement News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and we got a lot of it post-market hours yesterday. But first up, before talking about them, let's take a look at what the Asian markets are doing, and they are largely in the green today. We have the Taiwanese index, which is surging up around 1.3%. Hang Seng, which was up 1.5% at close yesterday, is up 0.7% again. So this particular market has continued to do really well. We have Straits Times, which is up around 0.4%. But other than that, we have seen some profit taking for the other Asian markets. So Nikkei has fallen in the red. Kospi too is in the red with cuts of around 0.3%. But SGX Nifty, despite all those moves, is showing an uptick of 54 points. It has come off slightly from the highs, but indicating that the start for our own markets could be well in the red. Remember, we were flat yesterday, consolidating in a range for our own markets. Let's talk about the US markets now. Wall Street broke a two-day gaining streak after contrasting comments from Federal Reserve leaders Lyle Brainard and Chris Waller on the Fed's rate trajectory going ahead. The Dow Jones fell about 0.6%, the S&P was lower by 0.9%, while the Nasdaq was the biggest loser with cuts of about 1.1%. Stocks slipped into the negative towards the end of the session on reports that Amazon would be laying off about 10,000 employees potentially starting this week itself. In fact, let us get you some important commentary from Federal Reserve officials now. Fed Vice Chair Lyle Brainard on Monday indicated that the central bank could soon slow the pace of its interest rate increases after 4 straight hikes of 0.75 percentage points. In her interview to Bloomberg News, she added that it is important to emphasize the Fed has done a lot, but there is more room for raising rates and rein in inflation within the 2% target. And let's also hear out what Alicia Levine of BNY Mellon has to say on the state of the U.S. markets.
The bottom line is the fundamentals don't support a market much higher than this because we're trading at 17.5 times next year's earnings, which is more or less where you'd expect to be with some inflation into the system and a normalized Fed funds rate, not rock bottom zero rates. So the fundamentals don't really support anything much. In the end, the CPI was important because it was a rate of change, which is very important to the market. But that's just not the only data. And let's not forget, the services inflation is still growing. So while core slowed down, core was slowed down by the goods sector, not the services. And in the end, it's the housing and the wages, which is going to be very sticky. And I'd say just one last thing, which is none of the inflation data has been linear this entire reopening.
Yeah, that's for sure.
And I suspect we're going to be there again. And don't forget, a softer dollar brings higher commodity prices, and then we're in that loop again.
All right, that is all the update coming in from the US markets. It's time to get to the final update in our global market wrap this morning. European markets ended Monday's trading session modestly higher, with the French CAC up 14, the German DAX gaining 88 points, and the British FTSE closing with a 67-point gain. The Eurozone's industrial output came in stronger than expected for the month of September, rising 0.9% month-on-month and 4.9% on a year-on-year basis. All right, that's all the global market action. How will these cues impact our own markets? We have to catch up on a lot. We have our research team to do just that. They are joining in with the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Well, first up, let me go across to Rima. Rima, tell us, what is the market setup looking like today?
Well, you know, we are entering a bit of a quiet period in terms of news flow now because we don't have any major local triggers as well. Yesterday, we had the CPI inflation. You know, as the RBI governor had indicated, it will be a sub 7% figure. It's come, you know, similar to that at about 6.77%. So the CPI inflation figure is out of the way. The earnings season has ended today. You've got a few stocks like ONGC, etc., which will react to numbers. But I'm saying in terms of cues, we're going to go very light. There are no major triggers, at least, that are lined up this week. So the focus is going to be on global cues, what the Fed speakers have to say in the course of, the Federal Reserve hike in December. That said, the U.S. markets, as you pointed out, snapped that 3-day winning streak. It ended with cuts of close to about 1%. The dollar index, which was 106.7 yesterday, has risen to 107 today. The worries about tech flow, the tech companies and the slowdown there persist, with Amazon according to reports, likely to lay off close to about 10,000 employees. So that would be a bit of a worry. The street will await the China industrial data and the retail sales data. Will it confirm that China continues to slow down? That will remain to be seen. The Indian markets are likely to perhaps consolidate. Today, the SGX Nifty is suggesting a slightly positive start, but let's see where we can go from there. In terms of flows, the FIs bought 1,089 crore in the cash market, while the DIs bought 47 crore in the cash market. Back to you.
All right, that is the market setup. Rima, thank you for that. Over to Surbhi now. She'll be joining in with all the stocks that will be in focus today. Surbhi?
Few stocks that will be on my radar today. The first one is ONGC, where the numbers have come in better than the expected. The revenues have come in at 38,300 odd crores versus an estimate of 35,500 crores. The EBITDA has come in at 18,800 crores. Margins have come in at 49%, and the PAT has come in at 12,800 crores versus an estimate of just 9,500 crores. Next is Biocon, where the revenue is up 26%, the EBITDA is up nearly 6%, and margins have come in at 20% versus 24% same time last year. Next is Aarti, where the revenue is up 34%, the EBITDA is up nearly 5%, and the margins have come in at 16%. Next is NMDC, where the revenue is down 50%, the EBITDA is down 73% at 851 crores, and the margins have come in at just 26% versus 46% same time last year. Next is Apollo Tyres, where revenue is up 17%, the EBITDA is up nearly 12% at 712 crores, the margins have come in at 12%. And lastly, Mindtree and LTI will be in focus as their merger is now complete and they've started operating as a merged entity as on yesterday.
Okay, all right. Those are all the stocks and news. By the way, the Chinese activity data has come in. It is coming in at 5% versus an estimate of 5.3%. So largely in line, on the back of which the Shanghai markets, they are doing well in trade today. But with that, let's move on and talk about all the action from the F&O space. Hey, Mangla.
Good morning. So, the SGX Nifty is indicating that the start would be about 50 points in the green, and that was reflected in the kind of, flows that we saw yesterday as well, that there is some sort of optimism for our markets, at least in the cash front. So, we had the FIs and the DIs put together, buying around 1,100 odd crores, a little over that much, but it was lower than what we saw on Friday. But at 1,100 crores, it's not bad nevertheless. What happened was that the Nifty futures premium from 74 points, which we alluded was at the higher level, has come down to around 50 points, and that's telling you that there was some unwinding because of lack of follow-through on Monday's trading session. The FIIs went ahead and sold about 700 crores in index futures, unwound about 5,000 long contracts, and perhaps, just to take that chance, added around 2,200 short contracts as well. As a result of which, the FII longs from 63% have now come to around 60-odd%, and the shorts are at 40% as well. What really stood out from the F&O data, however, yesterday was the unwinding of 28,000 short puts and adding 63,000 short calls. What this means is that the street believes that maybe at higher levels, we will continue to face resistance, and to that extent, the SGX Nifty positive start is something that we will get to test, because yesterday's high on the Nifty was 18,000, just below 18,400, and that's given 18,400 call writers some support to go ahead and write that call. Close to around, 29-30 lakh shares written on the short side at the 18,400 call. So that's telling you levels upwards of 18,400 to 450 may face a resistance. So it would perhaps be more prudent to buy at the dip as against chase the SGX Nifty gap up rally. Important support zone for the Nifty. We have 18,000 to 18,100, which continues to be an important support zone to watch out for. Whereas for the Nifty Bank, which is above 42,000, we'll watch out for 41,000 to 41,500 as important support zones for both those indices. In terms of stocks, most definitely keep an eye out on Sun TV and BHEL as they've entered F&O ban, giving company to GNFC and PNB.
All right, okay, Mangalam, Rima and Surbhi, thanks a lot for joining us. Those are all the cues that you need to watch out for today's trading action. With that, we'll slip into a break now. Up next, retail inflation slips below 7% in October, but still holds above the Reserve Bank's comfort zone. Details after this short break. Stay tuned. Welcome back. Well, retail inflation eased to a 3-month low in October, but remained above the RBI's tolerance band for the 10th consecutive month. The consumer price index inflation came in at 6.77%, with vegetables seeing the sharpest drop this time around. Ekta Batra is joining us now to decode these numbers. Ekta, what did you make of them?
Well, definitely a relief which is coming for the CPI data. We were expecting it to probably soften to single digit to a sub 7% figure, and that is something that the Reserve Bank of India governor had indicated as well. So the CPI data for the month of October came in at around 6.77% versus our poll of around 6.73%. So that was largely in line with estimates, but it softened versus 7.41% in the previous month. Now, what stood out in terms of softening was the consumer food price inflation. So that softened all the way to around 7.01% versus 8.6% month on month. We had vegetables which softened all the way to around 7.7% versus 18.05%. Pulses, which reduced to a sub 3% figure, came in at around 2.78 versus 3.05%. In fact, it was all of the components which had shown a lower inflation rate as compared to September in the month of October. One of the key reasons for a lower inflation rate was also because of the base effect. Now, one of the upsides in terms of the inflation data was the sticky core inflation, where the core CPI continued to be at around 6%. This is our versus our poll of around 5.9%. So we were expecting further softening. It continues to be sticky as compared to around 6.1% in the previous month. So overall, yes, positive figure coming in from the CPI data, a sub 7% figure, but in line with our estimates.
All right, okay, so some relief coming in there. Ekta, thank you so much for making sense of these numbers for us. Well, it's time for some exclusive opinion coming in from BSE member and market maven Ramesh Damani on why value buying goes a long way and why is he bullish on PSU players, the defense opportunity and the India story. Listen in.
I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupee ki cheez 98 mein khareedni chahiye. And that's the same true as in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make. Just when I started the Wizard show for the first time, I used to buy Bharat Electronics. It was a 20 rupee stock with a 2 rupee dividend built in, 160 crore market cap. It's 60,000 crores today. And I think it can go perhaps double from these prices too. So I mean, it's created long-term wealth. The mistake people make often is to bunch FMCG stocks versus all PSU stocks. These are all in disparate companies. There are some commodity stocks, there's some power stocks, and some defense stocks. So you need to learn how to pick the sector in the PSU that you're bullish on. I think the mistake a lot of analysts make is lumping them all together. So obviously you're going to come out with disappointing results. What if I bunched Himachal and Global and all those bad consumer stocks along with the levers and the Dowers of the world? Your returns wouldn't be that great. So I think that's a trap that a lot of people fall into. And these are good stocks, these are great businesses. The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books. They have excellent technological skills. And we are buying them literally, as I said, rupee ki cheez 54 mein, not even 98 mein. So, we're very confident about the play out in these sectors. A lot of what's happening in India excites me. And the reason for that is by just a freak of coincidence. We're at the right place at the right time.
And you can catch the all-new season of Wizards November 21st onwards only on CNBC-TV18. Let's slip into a break now. Up next, we'll get you all the cues from the commodities market. As always, stay tuned. Welcome back. Still tuned into Power Breakfast on CNBC-TV18, and as promised, it's all about commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, it is the precious metal prices which continue to catch attention because they're doing well. Gold is still holding around 3-month highs. Remember, it posted 5% of gains in the previous week, which was the best week in 30 months. And even better gains continuing in case of the silver prices there, where we are looking at nearly 5-month highs continuing there. But that really seems to be rubbing off across base metals as well, as we are looking at better data coming in from Europe today. So steel is trading at a 7-week highs. Aluminum price is holding a 3-month highs. Good gains is what we've seen in the month of November coming for these. Nickel is trading at a 5-month highs. We've seen 15% of gains overnight. Nickel is now trading about $27,000 per ton. There are supply concerns, and then the battery demand in winters is something that seems to be supporting nickel at these current levels.
All right, that is all about precious metals and commodities. Manisha, thank you so much for joining us. With that, let's also hear out what Goldman Sachs' Jeffrey Curry believes will play out in the commodities market over the next 12 months.
Now, when we think about the outlook for physical goods, it starts to get really bullish over the course of the next 6 to 12 months, primarily because you get China back in the picture. And that's the big news over the weekend is China. Second largest economy in the world's largest commodity consumer, was basically locked down and in a property market recession for the last 12 months. And the news over the course of the last week or so has been very positive in terms of reopening by addressing the zero COVID policy, but also have policies aimed at supporting the property market. So before they had a COVID problem, before they had a property market or a leverage problem, now they believe they have a growth problem, and they're focused on fixing the growth problem, and that's going to mean a lot to commodity markets.
All right, that's all about the commodity markets. A lot of updates there, right? But let's move on to the other big global headline. Global leaders are attending the 17th G20 summit at Indonesia's Bali. Prime Minister Narendra Modi arrived at the venue a while ago, and he was greeted by Indonesia's president. During the summit, the Prime Minister will have discussions on key issues of global concern, such as reviving global growth, food and energy security, environment, health and digital transformation. He will also hold bilateral meetings with key global leaders. At the closing ceremony of the G20 summit, Indonesia's President Joko Widodo will hand over the G20 presidency to India. Staying with updates from G20, US President Joe Biden and China Xi Jinping held the much-anticipated meeting on the sidelines of the G20 summit. The three-hour meeting was the first face-to-face since the US president was elected in 2020. CNBC's Marty Soong is here with the latest.
Good morning. Yeah, not just a meet and greet. 3.5 hours of talks yesterday, late in the afternoon and stretching into the evening. And I guess they appeared open, candid, at times blunt. And significant because this is the first face-to-face meeting the leaders have had since U.S. President Joe Biden assumed office back in January of 2021. The key takeaways, the U.S. president saying that he is open to competition with China. That's fine, but he does not want conflict. Take a listen to what he had to say.
We had, we had an open and candid conversation about our intentions and our priorities. Do I think he's willing to compromise on various issues? Yes.
So part of President Biden's comments included his personal assessment of the Chinese leader, Xi Jinping. And this was reassuring because he described him as a leader, Chinese leader, who he thought came across as willing to compromise. Now, on Chinese President Xi Jinping's part, initially it was all about pretty much boilerplate rhetoric, saying that, yes, he looked forward to working closely with the U.S. to try to improve the relationship for the betterment of the world. But in terms of compromise, he drew his own red line, saying that Taiwan is probably China's single biggest red line. And this is despite U.S. President Biden reiterating that, hey, the U.S. policy on Taiwan has not changed. So Taiwan came up still as a hot button issue. I think what's important here, and we've been talking about it as well earlier this morning, is that both sides appear to have agreed to set up, whether you call them teams or committees or groups of people at a working level. They push the work down, the granular work to the working level. their, I guess, underlings, as it were, to manage the relationship across all the different aspects of conflict, whether it's trade or technology or Taiwan or North Korea. That's what they plan to do going forward. So at least there will be communication and also exchanges at that working level.
All right, that's all the update from the G20 summit. And with that, we'll take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating that the start for our own markets, well, it will be in the red, up around 50 odd points. Stay tuned. Bazaar Morning Call comes up next.